Well, good morning to you and welcome again to Expert Alert. I'm Jim Tabor, your host. This is where we bring in experts from different types of businesses along the Gulf Coast with some great advice for you. And right now we've got with us Carrie and Jennifer Milligan from Strojny Financial that are here to talk to about, this is the time of the year that we think have two things in mind: Christmas and taxes. People are probably not trying to think of taxes too much right now, but it's something that you do have to do. But, and people are wondering, what can I do to lower my tax liability? And this is probably a good time of the year to be thinking about it.
Yeah.
So what can they do?
So what I like to say is, first comes Santa, then comes Uncle Sam. They're kind of right one after the other. But a lot of people aren't thinking about that right now. And the issue with that is pretty much December 31st is sort of the line in the sand. Whatever happens before that day is what's going on that 2020 tax return. Mm-hmm. And so if you're not thinking about it now, and if you're not planning forward, then you're missing that opportunity, because when you get to January and it clicks in, oh shoot, I meant to do XYZ, now it's too late. So some things that you can be thinking about. So there's two different ways to look at it. One matters if you're an employee, right, mm-hmm. on a W-2. Then that's a sort of a different set of concerns than if you're a business owner or self-employed or have rental properties and things like that. So on the individual side, under the Trump tax law that we're under currently, there's not a whole lot of personal deductions. If you think back to 2018, that's when they took the standard deduction and they doubled it pretty much for everybody. What that did is meant a lot of people can't itemize anymore, especially because they took away the job-related business deductions and mm-hmm. things like that. People that were salespeople and had a lot of mileage, they can't really use that right now.
That was one of the things I was going to
Mm-hmm.
ask you, because being a salesperson here at the station here, I'm out on the road all the time.
Right.
So I can't
and you
use
lost
it.
it.
I lost it.
That changed tremendously on that, and a lot
mm-hmm.
of people was affected by that. So, but still, on the individual level, there are many things you can do.
Yeah, so what you want to look at is, if you can itemize, you want to think about, your charitable contributions, you want to think about your property taxes. Now remember, they did put a $10,000 cap. So what a lot of people like to do, if they're not going to go over and be able to itemize each year, they'll pay their real estate taxes. They'll double up in one year and move some charity forward so that they get the itemization one year, and then the next year they know they're going to be standard, and they're kind of spacing it like that to try to get over that limit, because if you're married filing joint, it's $24,000. If you're single, it's $12,000, right around there. So those are some things you can look at. You also want to look at kids in college, if there's some fees and things that you want to pay in this year to work towards that American.
What about any money that you've had to spend because of recovery from the storms?
So that gets tricky.
Yes.
So I would say, if you have that kind of thing, that is something you're going to want to get with your advisor about, because some of those funds that people got are taxable and some are not. Now, if you had just storm damage and you got, insurance paid you back for what was damaged, that's just a wash. You don't really have to worry about that. And the casualty loss is a lot different.
The casualty loss changed a lot. Again, with that big tax law under President Trump, it changed where it's not as favorable, and it has to be in a fairly declared disaster area. So, and then there's still calculations to get over, and then also to be able to itemize. Mm-hmm.
So I wouldn't count on that one to bail you out.
One thing, Jen and Jim, I was thinking that an individual could do, that's just an employee, regular person, if they haven't maximized their 401k, right? So I haven't done the full limit amount, for the current year, then go ahead and try and do that. Because because this is the time of the year that they give you those options and everything to go in there and to change it, because I guess every company's different as to what you can put into it and what they will match. Right. And now, though, being if you have the money and able, you could put a little extra in, to try and maximize that at the end of the year to get the deduction for 2020. And why that's important, a lot of people get excited about tax deductions, right? Well, most tax deductions still is a payment to someone else, right? You're paying someone else.
Right. Somebody's going to get the money.
So this tax deduction is paying me for my future, right? And that's very powerful, I believe, because you're paying yourself. One day that money's going to come to you.
Right.
So I would wholeheartedly look into that. So, and then on the business side, we were talking individual. The business side, similar concepts, looking at things that may be they might have early in the year. Like, let's say I'm here contemplating, hey, do I, I'm thinking about buying this piece of equipment for my business, okay?
Right.
But I'm on the fence. I don't know if I should do it or not. Well, what we do with our clients, we look at, towards the end of the year, and we're looking at it to say, hey, look, yeah, you are having a really good year. You may want to go ahead and buy that. Now, again, as financial planners as well, we don't believe in going to buy stuff just to buy it to get a tax deduction. We don't believe in that.
Right.
But if it is something that will help and benefit your business and you're truly going to need, and you're maybe going to get it in May, you may want to get it now, so you can go ahead and bring down.
Use that as a tax deduction.
Absolutely.
Okay.
Absolutely.
One question I'm getting a lot the end of this year is, can I buy the car in my business or the new vehicle? That's what I want to be my Christmas present to myself or my family, and get that deduction. And just know vehicles have a lot of special rules. They are limited in how much you can take, as far as the depreciation on those vehicles and things go. So you want to just run it by and say, okay, well, if I'm going to buy a $50,000 vehicle, but I'm going to get $10,000 in depreciation this year, and I'm in the 22% bracket, I'm spending $50, I'm going to save $2,200 this year, so that
Right.
kind of thought process is how you would think through that.
Okay. So
I'm getting a lot of that right now.
So it's the best thing to do, of course, is if they have any question or whether something can be deducted, is to talk to y'all.
Yeah, absolutely. And to do it by the end of the year, because that's when we've got to know.
Do it earlier than later, because obviously everybody gets into the holidays, right? And people think about it on the last day of the year.
Right.
And it's hard to do things on the last day of the year, typically.
I would say with these PPP loans, these, the SBA assistance, the economic development grants, plus the loans, all those have different tax treatments that can make a big difference when you're doing this kind of planning. So you just want to make sure that if you've got any of that kind of money, you're paying attention.
So who has to file a tax return?
So you want to take it?
Well, it depends on a couple of factors, but most people that have to file is as long as they don't make more than their standard deduction, and so that's
Gotcha.
different for everyone. So so that's it. Now there are cases that are a little different where if I'm someone who's not on W-2, so I'm going to be self-employed, or I could be a subcontractor. A lot of people get subcontract and get a 1099. If I make more than $400, which is not more than my standard deduction, that's way less. But if I make more than $400, Social Security and Medicare start kicking in, they want you to file.
Gotcha.
So there's some cases where it's not that simple. So. Wish it was.
So when should I hire a tax professional?
So, if you just had a W-2 maybe and nothing else and it was straightforward, and you wanted to use online TurboTax or any one of those, Tax Act, that's probably fine. I will say though, after over 20 some years of experience in this, even people that think their taxes are simple, they're missing things. They're leaving money with the government, is what I believe. Okay, and they're not getting the full credits and deductions that they have. And not only people say prepare my taxes. We want to come in and prepare our taxes. Well, really, what we do is holistic. We're in there. Yes, we look at last year and we prepare, and then we explain to the client, what they could have done, why this is what it is,
right,
and what they could have done differently, and we prepare.
And that was going to be my next question. We got a couple minutes left. What is the benefit in hiring a tax professional?
Yeah, so when you look at that, like Carrie said, a lot of times people are leaving money on the table. And, we go to a lot of continuing education every year. We have 30, 40 hours of continuing education that we have to do every year to get the nuance. And so that's where you pick up some of these deductions. A lot of people just don't understand. They know how they can read the questions and enter it into a software, but when they get the form on the other end, they don't really understand if the numbers went to the right place.
Right.
That's when they end up coming back to us later with a letter from the government saying, hey, we think there might be a problem here, and then we get involved and we're retroactively. Sure. Another thing is, people spend a lot of time on this. If you do your own tax return and you're not really like cranking them out on the hour like we are, you're going to spend a lot of time on that. And generally the cost of paying the advisor is less than what you could do, what you could create in value in your life by spending that time somewhere else. I mean, that's just my personal opinion. If I didn't do it for a living,
they may miss something that you want.
They may miss something. They may actually take something that helps them, but that was wrong too, and then they get that letter 2 years from now, and that's a tough thing to deal with. Absolutely.
All right. Jennifer and Carrie, thank you for being here with us again. It was all this great information. Of course, by next time we meet, it'll be the new year.
Yes.
That's right.
So and by then, it may be too late what you did as far as what you are going to file or the decisions that you make, like the 401k.
Right.
That's a really good tip there. Think about that. Anyway, thank you again for being with us. Strojny Financial here on the Gulf Coast. They're located on Pass Road in Biloxi, Suite F. If you'd like to make an appointment, just give them a call, and they'll be happy to. And we'll see you next time on another Expert Alert.
If you have a question for any of our experts, go to WLOX.com and click on Expert Alert. For a list of any of our upcoming experts, go to WLOX.com and click on Expert Alert.